You probably heard this phrase a lot. Neoliberals came into power in the 80s. They deregulated the economy, lowered taxes on the rich, and this all ended basically socialist paradise and led to rampant inequalities. Um, Now, I wanted to learn more about the details of this story. So the only thing I was able to do is ask AI what he thinks about it. And the results actually quite surprised me. I would say I changed my mind on neoliberals a little bit. So I decided to share them. Well, I don't know whether you like it, but that's the best I can do. Um, so yeah, first of all, we need to put the rules of Ronald Reagan and Margaret Thatcher, who will be our main neoliberal characters, and these discussions in a proper context. So I will only talk about UK and US, yeah, because I think that's what people usually have in mind. And they're, two brightest characters, I would say. So yeah, so both Thatcher and Reagan um, inherited economies marked by the global stagflation of the 1970s, simultaneous high inflation and stagnant or weak growth combined with rising employment. This broke the post-war Keynesian consensus that the governments could fine-tune demand to achieve full employment and stable prices. Yeah, you probably heard about this. I think I'll need to make a separate video about this story. It's interesting in its own way. What economic theories dominated the world in the beginning and the middle of the 20th century. Um, it arise from the analysis of the Phillips curve, which I think was entirely misleading. They just saw that during rising inflation, unemployment usually goes down, and in general, they thought that means economy is kind of booming, so it's good. And when inflation goes down, unemployment rises, and we kind of even see that usually happens during recessions and hard times. So the primitive analysis told them that, oh, okay, inflation is good, deflation is bad, and they tried to make Federal Reserve actually maintain it. So that's kind of it. That's what the view was, and that's how the data backed it. Of course, it's just obviously wrong, and that's not how economy functions. Yeah, you could have a temporary, uh, you know, growth, but it was terribly misleading if it's growth literally propped up by the government and low interest rate policy, which will eventually end into a bust, and then the adjustment happens and the prices fall and unemployment rises, and this is painful. Yes, of course, but the answer is not trying to create a forever bubble, right? So this was a failure, and this eventually ended in stagflation, which literally broke the model. And they saw that it should be impossible. Yeah, that's more like on economic ideology side, economic theory. The dominant economic theory was defeated, and the new theory should come in, supposedly, right? Now, he also mentioned shared global shocks, including the collapse of Bretton Woods fixed exchange rate system. Yeah, again, why would you expect it to last if you were printing money, right? Um, I think that's kind of expected. two major oil prices spikes, and slowing productivity growth across advanced economies. Yeah, okay. And the inherent problems were more severe and structural in the UK than the US, which still remain the world's largest and most dynamic economy despite the difficulties. So, because of that, I'll mostly mention problems in the UK, and I kind of will skip US to some degree because you could just keep in mind that US is similar to the UK, but it's just not as bad. The same problems which US had, UK had as well, and they were more profound. Okay, United Kingdom before Thatcher. Britain entered the 1970s as a sick man of Europe, experiencing long-term relative economic decline. Real GDP per capita had fallen relative to the US and West Germany. Yeah, okay. Inflation surged dramatically. It averaged high single digits early in the decades, hit 16% in 1974, peaked at 24% in 1975, and was still 13% in 1979. Growth and unemployment. Real GDP growth was volatile, strong early, peaking near 6.5% in 1973, then negative in 1974, minus 2.5%, and minus 5.5 in 1975, recovering later. Unemployment rose. Yeah, I mean, not that much. I actually don't know how exactly people analyze unemployment rates. They're always not that big. Yeah, now, importantly, the 1976 IMF crisis. Sterling collapsed amid high public borrowing and balance of payments pressures. The Labour government under James Callaghan was forced to seek an IMF loan, the first time a major industrial country had done so in the post-war era, accepting spending cuts and fiscal restraint as the conditions. This was widely seen as national humiliation. Yeah, of course, I mean, usually IMF gives its loan to some kind of poor countries which always have troubles, and has to kind of police them and, lecture them a little bit about how not to print too much money. So yeah, it's really an embarrassment. Industrial relations and the British disease. Powerful trade unions, frequent strikes, and inefficient nationalized industries, coal, steel, cars, utilities, telecoms, etc., were central problems. Management practices were often weak, communication limited, and productivity lagging. Top income tax rates stood at 83% and up to 98% on investment income. Kind of crazy. Winter of discontent. 1978, 1979. Widespread strikes under the Callaghan government led to uncollected rubbish in streets, disrupted hospitals, power cuts, and bodies left unburied in some areas. Public services ground to a halt, reinforcing a sense that the country was becoming ungovernable. This directly contributed to Labour's defeat. So just, yeah, for those who were wondering, how did neoliberals got into power? Just out of nowhere, people just said, "Oh no, we want what, capitalism back." No, I mean, there were bodies unburied on the streets. So I guess people were fed up with this. Now in US, situation was kind of better. They didn't have nationalized industries, but they had the same problem with stagflation, unemployment, right? Slowed growth. They also suffered from oil crisis a lot because it depended on oil back then. And in general, the Iranian hostage crisis, domestic energy shortages reinforced perception of national weakness. Federal Reserve Chairman Paul Volcker had already begun aggressively tightening of monetary policy in 1979 to confront inflation, setting the stage for the early 1980s recession that Reagan inherited. Yeah. So the inflation was high, and unemployment was high as well. Against the theory, and didn't know what to do, but they thought like, okay, let's just at least increase rates. Maybe inflation will go down. Well, but that's according to the theory, it led to recession, right? So now unemployment is worse. Okay, so now what neoliberals did at first, okay, a general overview, and then I want to spend more time on the financial reforms, especially because that's I would say the most controversial, and that's where what I saw there is not what I expected at all, because as you can see, AI kind of give me this general overview. I kind of ask him to separate what was, pro free market reforms, what was anti free market reforms, and he told me that in general, you see, Thatcherism emphasized free market neoliberal reforms inspired by thinkers like Friedrich Hayek and Milton Friedman. But is it actually true? They prioritize privatization, deregulation, lower direct taxes, weaker unions, and monetary control of inflation over full employment. Well, that's not exactly Friedrich Hayek's idea, right? It's the same, as you can see, it's within the same paradigm. Thatcher also promoted individual responsibility, home ownership, and a reduced role of state and industry, while retaining the national health services and elements of the welfare state. So, yeah. So the big thing is, for her, privatization of state-owned industries. Major sell-offs include British Telecom, British Gas, British Airways, British Steel, parts of British Aerospace, and LED utilities, water, electricity. Yeah, I didn't even know they have so many governmental companies. And the consequence, many firms become more efficient with high productivity, cost cutting, and competitive sectors like telecoms. Many people complain that in non-competitive sectors they didn't get better. Yeah, it's kind of true. Imagine you privatize some railroad industry or water, electricity infrastructure, which was already built many years ago, and there's no clear ways to start building the new ones, or maybe no clear necessity. So there's no really room for market competition anymore. So yeah, it's not clear how to make them better. Critics argued assets were sold too cheaply, selling the family silver. Yeah, it's interesting. Privatization spread international as a model. Yeah, I want to mention that because I didn't know, but apparently this means that in Russia, during the 90s, they followed Thatcher's footsteps, right? That she was kind of the first to do something like that in quasi-socialist economy. And those people in Russia were accused of the same thing, that they sold these assets too cheaply. And of course everything was very corrupt because it was Russia. Yeah, but interesting to know that she was a role model. Deregulation of finance, I will talk about separately because that's kind of misleading. Yeah, the biggest thing I think is tax cuts. The top marginal income tax rate fell from 83% to 40%. However, it was partially offset by raising VAT, consumption tax. Yeah, so then we get into trade union reforms and confrontation. Legislation restricted closed shops, secondary picketing, and sympathy strike, required ballots for strikes and leadership election. So, okay, I don't know whether you know what it is. I personally didn't even know. So closed shops is agreement between the unions and the employer which require the employer to only hire people who are parts of the unions. Secondary picketing is basically joining the strike of another factory, and sympathy strikes. So the fact that she prohibited all this means she doesn't actually act upon, the laissez-faire principles, because this was, kind of market arrangements. It kind of goes to show what the state of the politics has become. Now, if there is a different political parties fighting, one movement loses, other movement come into power, and instead of thinking about these principles, like and figuring out, well, okay, the unions are strictly speaking voluntary agreements, so we should not really touch them. We should instead work on other problems. We need to get government out of people's life. No, it's more like there was a problem. They led to this dysfunction, more trash and dead bodies on the streets. People didn't like it. People give us a mandate to power, so we're going to use our power to ban it. So it's not really a principled policy at all. Okay. Monetarism, tight monetary policy, yeah. Early focus on controlling the money supply to curb inflation. Yeah, we have high interest rates. That's expected. The right to buy was a program of selling, apparently, on it for cheap prices, some publicly owned houses to give new homes to people. Yeah, okay. On the other side, there was some new taxes as well, but I know it's not really consequential. Yeah, in general, as you could see, there's no really major welfare reform mentioned here at all. So the biggest thing is tax cuts for the rich. The trade unions reform and privatization. So the idea, which I think both Thatcher and Reagan had, is that we're just gonna cut taxes, and this will actually generate more growth and therefore bring us more revenues. And then we will be able to pay out all our debts and afford all the welfare state. And so I'm just saying, when they were declaring free market, but actually when the push come to shove and the question become, what do we do with the welfare state, they didn't have the gut or the intention even to abolish it or reduce it in a new form. And of course, that's kind of unsustainable and contradictory. This will not really work in the long term. So the big structural reform just didn't happen. And also, well, it's interesting, AI mentions here that there was this oil discovered somewhere on the shore recently, and that's the income from it partially allowed to offset the losses from tax cuts. So it was kind of even more unsustainable than we might expect. Yeah, revenue losses were offset by growth, North Sea oil, and VAT. Now, Reagan, again, did something very similar. The major thing is the tax cut, cut the top US marginal tax from 70% to 50%, with further reductions to 28%. And corporate rates also fell. the same supposed deregulation of free or freer market, which I will talk about more later. The same increase in interest rates, attack on unions, and rhetoric. But that's kind of it. So there was no major welfare reform, and it's true that his rhetoric was always strong, but he was really only strong in words. He didn't have the power for a major reform. Yeah, and also, by the way, the spending, I think he even increased because of the military. It's kind of controversial. You might say he was trying to win the Cold War, but in retrospective, I don't think it was really necessary. Plus, we're still bearing the consequences of this military budget expansion even today. This Star War, Cold War era projects are still there, buried somewhere deep in this Pentagon budget. And they all, went over the original budget. They all obsolete now, and it's just useless. Okay, now I want to talk about the financial sector, because that's where I expected a lot of change, because I said it was the most consequential, right? It's what determines how your market will behave in general. And I thought that this stock market growth, which we saw in America, was really a result of this kind of reforms. But now I see that actually it's not the case. Now I see that the nature of those reforms are very different. Now let's start with Thatcher. So the first one is actually quite major one, I agree. It's abolition of exchange controls. The government fully dismantled post-war capital controls that had restricted the movement of sterling and foreign currency in and out of UK. Individuals and firms could freely invest abroad, repatriate profits, and hold foreign assets without prior approvals or limits. Yeah, this immediately integrated the UK more deeply into global capital markets and is widely viewed as pure liberalizing measure. Yeah, I think it's very good. I don't even know who would say that this is bad. It's again just really makes your economy stronger and more globalized. And I think it's a major thing. US probably didn't need it because US was already globalized. Now, this Building Societies Act, here's we get into the weird part. Allow traditional mutual building societies focused on residential mortgages, greater commercial powers, including wider lending and the ability to convert into banks, demutualization. It broke the previous cartel-like arrangements and intensified competition in the mortgage market between banks and societies. Now, if you're like me, you probably didn't even know what the mutual building society is. So I have to look it up again. So the mutual building society is a financial institution owned by its members rather than external shareholders. It provides core banking services like saving accounts and home mortgages. Instead of paying profits to stock market investors, a building society reinvests its financial gains into better saving rates and low mortgage costs. So every saver or borrower is a member, not just a customer. Voting rights. Each member gets one vote on important company decision, regardless of account size. Very weird. So it works like the government. Shareholders. No shareholders. They're not listed on the stock market and answer only to their members. Yeah. Key difference for traditional banks. run for member benefits and community value rather than maximizing corporate dividends. So it's very weird. I would say socialism-minded inspired structure. And they basically abandon certain regulations on them. So it's kind of very technical. So I would say initially I was surprised, but you will see later what's going on and why is it happening. Now, the Big Bang. As language reform of the London Stock Exchange resulting from a settlement of an Office of Fair Trading antitrust case Unrestricted Trading Practices Act. Okay, so major changes implemented that they included abolition of fixed minimum commissions, previously set by the exchange. But the thing is exchange is like a private institution, right? Well, wait. Yeah, so it's kind of very weird structure. Self-regulated association of individual human members, owned and governed by its own floor brokers and jobbers, rather than external corporate shareholders. Well, okay. So it's not really part of the government. In other words, what she's liberalizing here, she changed the rules of some stock exchange, which was, under threat of some antitrust lawsuit. So it's kind of controversial for me. The end of single capacity rules strictly separated stockbrokers, agents for clients from jobbers, market makers holding inventory. Okay. The opening of exchange membership to foreign banks and securities firms, that's a no. That's a good idea. Shift from traditional open outcry floor trading to electronic screen-based trading. Well, I don't know, it's just like innovation. That's not really a law. Now, Financial Services Act 1986 established a new statutory regulatory framework. It created the Securities Investment Board, overseeing self-regulatory organizations for different market segments. Yeah, while the Big Bang liberalized market structure and removed private restrictive practices, this act extended formal statutory oversight into areas previously governed mainly by contract law, professional codes, and industry agreements, especially retail financial products and investment businesses. Well, so it's basically more regulation, right? She replaced internal private firms agreements with actual laws. Yeah, some analysis note that overall Thatcher's era replaced a system of largely private club regulation with more state-backed rules. Yeah, so that's clearly not laissez-faire at all. And in general, except for the first part, that doesn't seem like anything major and consequential, and it seems very niche and very unprincipled. Yeah. There's no idea of, oh, okay, we just want to have more freedom, so let's pull out those regulation massively. No, it's just really a couple of tweaks here and there, and with no clear logic. But the thing, the logical problem will become clear when we get to US. Okay, so here, what Reagan did. It starts with Carter, enacted under Carter, but with effects and continued and were expanded under Reagan. Yeah, Depository Institution Deregulation Monetary Control Act of 1980s. It began phasing out regulation Q, interest rate ceiling on deposits, allowing banks and thrifts to compete more freely for funds. Yeah, so this was some pre-World War II era regulation that imposed legal limits on maximum interest banks could pay customers. Well, probably we could say it's a major change, right? Why would this limit should exist? It's really very disruptive. Yeah, as you can see, economics impact. When inflation rose in 1960s and 70s, market rates went above the legal caps. People pulled money out of banks to find better returns elsewhere. Exactly. High market rates led to the creation of money market mutual funds as a workaround. So yeah, and then people just build new structure, which we just don't call bank anymore, I guess, which doesn't satisfy this restriction. Yeah. High inflation market pressure made the caps unworkable by the late 1970s and 1980s. Congress passed laws in 1980s and 1982 to phase out the caps. Yeah, and now the formal prohibition of interest for business checking accounts ended completely in 2011. Okay, so that's a big deregulation, indeed. But I don't know who will say this is bad. It was clearly dysfunctional. So it should be removed. Yeah. Then he also raised federal deposit insurance limits from 40,000 to 100,000. Yeah, this is not deregulation. That's clearly more government involvement in the financial sector, because now deposits have more federal insurance. So if people lose the money, taxpayers should pay for them. Then he also required all depository institutions to hold reserves with the Federal Reserve and reduced some distinctions between commercial banks and thrifts. Now, I was kind of surprised. I thought like that all deposit institutions were already required to hold reserves with the Federal Reserves way before that, but no, actually, it was only the banks. And he just extended this to all other institutions, like non-member commercial banks, savings and loans, credit unions. But I would say it's still more regulation. Okay, German, I don't know how to read it. Deposit Institution Act of 1982. Signature Reagan era financial deregulation law. Authorized new money market deposit accounts that could compete with money market mutual funds and super NOE accounts. Okay, so what is this money market deposit accounts? So a money market deposit account, MMDA, is a federally insured bank savings product, whereas a money market mutual fund which is, I asked him what's the difference is an uninsured investment security offered by brokerage firms. While both provide high liquidity and low risk for short-term cash, they differ significantly in safety, regulation, and where you buy them. So this is not deregulation, right? It's just clearly introducing government-backed firms into the system such that they could, crowd out the free market institution, right? Which is a money market fund. So it's just really bad. Expanded the powers of federally chartered savings and loan associations, thrifts. They could make commercial real estate loans, consumer loans, commercial loans, and non-residential mortgages up to high limits of assets allowed adjustable rate mortgages. So again, he increased the power of some federally chartered organizations. Eliminated remaining interest rate differentials favoring thrifts over banks. Now, if in case you wonder, what are the thrifts, right? So the thrifts is the same thing as this mutual building societies in the UK. It's something like this, something very similar. A thrift institution, like a saving and loan or saving bank, focuses heavily on consumer saving home mortgages, keeping at least 65% of its assets in housing-related loans. Commercial bank is a full-service, broad-market business that handles corporate accounts, global services, and diverse commercial loans alongside consumer banking. So that's the difference. Thrifts face strict limits and can place no more than 20% of the assets into commercial loans. Many thrifts are mutually owned by their depositors and borrowers, function similar to credit unions, whereas commercial banks are typically stock-owned corporations. To profit for shareholders. Okay. So as you can see, this part is very similar to what Thatcher did in the UK. Relaxed limits on loans to one borrower, real estate lending, and some insider loan rules. Okay, I don't know what this does. Why would you have restrictions on loans to one borrower? And then gave regulators more tools to assist troubled institutions. So what, promoted the bailout? This is not really laissez faire. This is really helping the industry. And now, finally, the explanation comes at the end. The act aimed to help thrifts that was suffering from high interest rate. They held long-term fixed rate mortgages while deposits cost soared under Volcker's tight money. So now this kind of explains where this all come from. So these thrifts in US and mutual building societies in the UK, this creation of this kind of socialist mind compromised with the necessity to survive in the market reality, which means just reality, which is some kind of weird, very supposed to be very safe, so we restrict all possible, assets which it could own. It kind of owned not by the rich shareholders, but more like all the customers together, and they kind of could vote like in the government. So this thing was totally dysfunctional, and it failed because they only hold these mortgages as the assets, which they acquired at very low interest rate environment, but they have to pay interest to the depositors, which depended strongly on the current interest rate, which was now strongly increased. So these institutions were failing. And what Thatcher and Reagan actually did is they basically bailed them out. And the way they bail them out is through this so-called deregulation, where they just make those thrifts into banks, and now they could get rid of these toxic assets and do what usual banks could do. And I understand, like, what are the leftists complaining about, that now the dysfunctional semi-market entities don't exist anymore, and this deregulation what pushed consumers into more dangerous investment institutions, and then it led to eventually 2008 crisis, because it seems like if they didn't do it back then, they would have a housing crisis already in the 80s in some form, because these thrifts would just fail. So yeah, I think it's more like really laws which came out of, you know, some kind of cooperation with industry and results of kind of lobbying of certain interest groups, which was just in a bad position, and the government caving in out of fear that you know, everything will go down and we'll get some kind of 2008 like situation. There's nothing really major here. So I feel like the financial deregulation by neoliberals is to big extent a myth. And also, yeah, it's interesting to notice that the inequality start to rise even before that. It's somewhere in the 1970s, after the gold standard was abolished, that really the curse took off. So yeah, I mean, I don't know. I really became more upset with neoliberals. It seems like, yeah, they don't really follow the free market principles at all, even in their deregulation attempts. Their attack on trade unions showed even more that they could just whimsically use power against things they just don't like, without thinking how to, you know, solve the problem without putting guns to anyone's head. And of course, most important, as I said, they failed to reform the welfare state, and instead rely on just tax cut and expectations of future growth to fund it, which eventually is doomed to fail. So yeah, unfortunately, I'm kind of disappointed